Okay, so you might not see it, but every single day there's this massive, invisible war being fought, and it's happening right inside our financial system. It's a super high-stakes battle against criminals trying to sneak billions of illicit dollars past the gatekeepers of our economy, the banks. And this hidden war has built a really complex system of defenses that affects all of us, whether you realize it or not. So let's pull back the curtain and see how this fight actually works.
You know, it all really starts with a question I'm pretty sure we've all asked. You're sitting there staring at this mountain of paperwork, and you just think, why is opening a simple bank account so complicated now? Well, it turns out it's not just bureaucracy for the sake of it, it's actually the very first line of defense in that invisible war we were just talking about.
So, at the heart of all this, you've got the problem of dirty money. I mean, it's exactly what it sounds like. Funds that come from criminal activities. And for that money to be useful, criminals have to find a way to sneak it into the legitimate financial world. And guess what the #1 target is? Yep, banks. They're basically the front door.
And that process of sneaking the money in, that's what we call money laundering. It's basically a financial magic trick, right? The goal is to take cash earned from, illegal stuff and wash it through the system so it comes out the other side looking totally clean, like it was legitimate profit all along. It's all about erasing where that money really came from.
And let's be super clear here. This is not a victimless crime. Not even close. When this system fails, the fallout is, well, it's catastrophic. We're talking about the money that fuels organized crime, that funds terrorist networks, that can corrupt entire economies from the inside out. And maybe worst of all, it just shatters our trust in the very financial system that's supposed to be keeping our money safe.
So, faced with all that, how do banks actually fight back? Well, their first major weapon is a whole set of procedures that basically acts like a team of financial detectives. It's called anti-money laundering, or AML for short.
Okay, so to catch a money launderer, you kind of have to think like one. And their playbook usually has 3 main steps. Step 1 is placement. This is just getting the physical cash into the system, into a bank. Step 2 is layering. This is the tricky part. They move the money around through a whole mess of complex transactions to hide its source. And finally, you've got integration. That's when the money is reintroduced into the economy, looking all squeaky clean, as if it came from a legit business. And banks, they're trained to spot the red flags at every single one of these stages.
Yeah, a good way to think about AML is like the bank's super high-tech security camera system. It's constantly running, using really powerful software to watch millions of transactions. And it's looking for anything that seems off. Weird patterns like a brand new account suddenly getting a massive cash deposit, or money zipping between different countries super fast. That's the stuff AML is designed to catch.
But just watching transactions, that's only half the battle, right? I mean, you can't really understand what's happening if you don't know who is doing it. And that brings us to the second pillar of defense, and honestly, this one might be the most important. It's called Know Your Customer, or KYC.
And this quote here really gets to the heart of it all. The whole point of these measures is just dealing with genuine customers. So KYC isn't really about making your life difficult. It's about making sure that the people using the bank are actually who they say they are. It's all about protecting the whole system and all of us legitimate customers from the bad actors.
And man, has this process changed over the years. Back in the day, opening an account was pretty simple, but now, it's a whole different ballgame. Today, banks have to do what's called customer due diligence, and that's why they ask for all that paperwork. They're legally required to verify your identity, get a sense of where your funds are coming from, and understand what you plan to use the account for.
You see, KYC isn't some standalone thing. It's actually a really critical piece of a much bigger machine. And that machine is called compliance.
So if AML is the detective work and KYC is the ID check, then compliance, well, that's the entire rulebook for the whole operation. It's the collection of all the laws, all the regulations, and all the internal policies that a bank has to follow. It governs pretty much everything they do.
Actually, here's a fantastic way to picture it. Think of compliance as the building code for a bank. You know how a building code makes sure a skyscraper is built right so it won't fall down? Well, the compliance framework does the same thing for a bank. It ensures the institution is safe, sound, and operating completely legally.
And we're not talking about some vague mission statement here. This is a formal, written policy with really specific parts. It lays out the main objective, it defines exactly what the compliance department is responsible for, it details the role of the chief compliance officer, it even has a whole program for managing risk. It's a full-on blueprint for how to operate legally and ethically.
Okay, so you have the rule book, but how do you actually make sure everyone follows the rule book day in and day out? Well, banks use this really effective organizational model for that. It's called the 3 lines of defense, and it's all about creating layers of protection.
The first line of defense is, well, it's the front line. These are the people you actually interact with at the bank. The tellers, the loan officers, the operations staff, they are the ones who own the risk every single day, and it's their job to put all those compliance rules into practice.
Then you have the second line. Think of them as the oversight committee. This is where your compliance and risk management teams are. They're the ones who write the policies, give guidance, and basically watch over the first line to make sure they're doing everything by the book.
And finally, there's the third line, internal audit. Now, this group is totally independent from the other 2. Their job is to be the ultimate check and balance. They report directly to the board of directors and give them an objective, unbiased look at whether the first and second lines are actually working the way they're supposed to.
So when you put them all together, these 3 lines create this really strong layered defense system. And that structure is absolutely crucial. It's what keeps the bank stable, it's what protects everyone from customers to shareholders, and ultimately, it's what upholds the integrity of our entire financial system.
Which, brings us right back to where we started, this ongoing invisible war. Because the criminals, they're not standing still. They are constantly inventing new ways to cheat the system, using tech to find new loopholes. And that leaves us with a really big question for the future, doesn't it? As financial crime just keeps getting smarter, can our defenses, which are more and more reliant on things like AI and big data, actually keep up? Will they be enough to keep our money safe?